Good morning, Hubert John. Good morning, Hubert Johnson here with Taxes Made Easy. Um, kind of relaxed, feeling a little better that it's tax day is now behind us, April 15th. We don't prepare taxes, so we don't run around crazy like most CPA firms and tax preparation firms. But yesterday was still a pretty crazy day for us. All kinds of questions. What do I do? Do I file an extension? I hope you did file an extension because that's what we're going to talk about today. What if I didn't file an extension? What if I didn't get my return in by April 15th? How is that going to affect me? And how do I fix it? So that's what we're gonna talk about today is how to fix it and how to get this done, to save you some money. So we're going to talk about some of the penalties and how to get those taken care of. There is a lot of news out there today, so we're going to be covering that, and we'll be right back. Welcome back, everybody. We're going to start off with this article, NBC local station out of New York, talking about someone known as the magician. And of course, I was thinking as I was first reading this, I'm like, I've got to. How could I resist not saying a pun? But the IRS beat me to the punch. So again, IRS criminal investigations probably spent years investigating this company, and they even say, well, Alvarez may have been known as the magician. He can't say abracadabra and make these charges disappear. The interesting thing, he has this company called ATAX, and again, these are allegations. These aren't proven yet. But they're claiming that he ripped off over $100 million in filing fraudulent tax returns for more than 10 years. So again, there's no statute of limitations when it comes to fraud. And then they're saying he grossed $15 million as a result of this. So what are they claiming? So they claimed he retired, no longer worked for the firm, etc. But again, this is something we're getting one side of it. But what did they claim that he did? That he recruited customers, and then he and his employees would falsely itemize business deductions and make up capital losses to increase refunds. So again, this is tax fraud. You're lying to the IRS to get a bigger refund. That's never good. If you have someone that's doing that and making up issues, run for the hills, because all of their clients are not going to have all of these refunds pulled back. And because it's fraud, there's no statute of limitations. So you have tax fraud, identity theft, making false statements, and conspiracy. So again, it's the IRS made a point of arresting him on tax day, April 15th, the busiest day of the year. And so that was a little bit spiteful on the part of the IRS. But I just want to emphasize, if you are not looking at and checking your return, you're asking for trouble. You should know what's on your tax return. You should sit down and go over it with the CPA or with your tax preparer, and it should be explained to you. How did I get to these numbers? If you have someone that's not explaining things to you, look for a different CPA. Now, I get there's a huge shortage of CPAs and tax preparers, qualified ones. It's hard to find a good one, but again, we do have referral networks. We can refer people out to good CPAs. But word of the wise, if you filed your tax return and you did not check it, you need to check it. And if you find discrepancies, if you file irregularities, how do you fix that? You file an amended return. And I would do that sooner rather than later because the IRS is digging into this. So this is why I highlight this article, because it just brings brings home the message that you have to be checking your return. Don't just look at the refund, I don't owe, or looks good to me. There are plenty of scams out there, tax preparation firms that are scamming the system, so to speak, and coming away with millions of dollars. But again, this is, to be fair to them, we're getting one side of the story. But again, if you do have returns for them, again, be aware you're going to have a big issue here. Okay, so the next article I want to look at, this one's a little, you could say it's a little funny. This is an article from townhall.com, and it's talking about yesterday there was a day of protest across the country. Now, if you're in one of the major cities, you probably saw it, heard about it. If not, you probably didn't. I didn't hear anything about it. But again, this is 150 arrests were made, but pro-Palestinian protesters, they're going to continue their protests. But across the country, they shut down major bridges, roads, and highways. So caused major disruptions to traffic. But overall, the article really focuses on how people are getting fed up with this. There's a few people going out and just blocking a freeway. But at the same time, overall law enforcement is very tolerant to it. So they don't go arrest them in most places. They don't stop it. And then unfortunate thing is that these protesters, they don't let emergency vehicles through. Ambulance, police trying to get to emergencies, firefighters. So people that need immediate care and help don't get it. And a lot of times people, trying to get to the airport, you're on a time crunch. It hurts a lot of people and can cause deaths. So that's the other side of the story, that people are just really frustrated. In the Bay Area, they blocked their three separate locations on freeways. So blocking paramedics and ambulances as well. So this happened in Washington State, New York, Chicago, Oregon, and also Florida. Florida, being the state that it is, had a different approach. They grabbed them to the side of the road and arrested them. And they passed a new law recently where it's felony with up to 15 years in prison for blocking roads in Florida. So they have a little different take on it, and we'll see what works. But their traffic wasn't blocked for long. We do have a right of protest. We want free speech, but do you do it at the expense of others? That's the question. Is that you should be able to speak. You should be able to get your message across, but you should be protesting peacefully. And the argument is that, again, affecting people like this isn't being peaceful about it. It's being, you're infringing on others' rights. So I thought that was a little interesting if that affected you, but, the difference between how different states address it. So we're going to go back a couple articles here on auto insurance. And we've talked a little bit about auto insurance. And this is a Fox Business article. And I'm going to go ahead and share this because there is a lot here to unpack and to understand. And just like
with world-class
if you move things around in one part of the economy, you're going to have effects on others. And it's hard to see all the how
thousands of drivers are going to
making manipulations in the market are going to affect you in different ways. So again, Fox Business, auto insurance premiums, why? That's the question. And they go through this, and this is something that I've seen myself. Our premiums jumped up by over $1,000.
Pretty ticked off. I got on the phone with
We went, what in the world? So we've been making some adjustments. We paid up some vehicles so we could get rid of the comprehensive insurance, and we're going to be saving that money instead for the purchase of newer vehicles. So that's one way to address it. We signed up for the little plugins, which I don't like. It's very big brotherish, where the government or the life and auto insurance companies see how you drive. They judge you on it. We did just get 4 out of 5 stars so far for it, but they dangle a huge discount up to 45% discount for good driving.
The Nevada
My
Division of
teenagers are
Insurance
still
says
working
there are
on
a
that.
couple of reasons prices have been rising.
But it's hurting people in a very real way. So not everybody can make these adjustments. And by paying off our cars and changing our insurance, we dropped our rates. We cut $750 off of our monthly rate, down from what,
Nevada's Division of
2,800 a
Insurance
month.
has to
It was
oppose all
1,800,
car
jumped up
insurance
to
increases. This
2,800.
year's price hikes are
We're getting a little bit of relief here, but it's hurting people across the country. So, main thing is high inflation throughout the market is causing auto insurance premiums to go up. Part of the reason for this,
but they also will usually approve of reasonable rate increases.
so you have rent and groceries are the two biggest things leading to that. We're going to jump and talk about groceries in a sec. But rose just in the month of March, it jumped 2.6% for a year-to-year increase of 22%. And one of the reasons for that, so if you go back to 21, it's now 50% more expensive over the last 3 years. That is huge. I mean, these kind of inflation numbers, when you look at the actual increases, ignore the government numbers because they're distorted. They only share part of the picture. But when you see the insurance companies making massive adjustments like this should be a wake-up call to people saying, oh my goodness, things are really costing a lot more. And that cost eventually is always passed to the consumer in multiple ways. So again, that's the big thing is people think, oh, inflation, I'll get more money. It'll be deflated and the cost of everything goes up faster than the cost of real wages, unless real wages are built not on inflation, but on actual productivity. If we were building more things, shipping more things, and we were producing more, being more productive as a society, then you will see wage growth outpace inflation. Otherwise, the poor just keep getting poorer, which again, it's a tragedy, and we see that every day. So one of the reasons for this is that the auto insurance companies have to wait to get their insurance increases approved. So again, this talks about the surges here, and then some of the things, and some of the numbers about it. I'm not going to dive in the details so much about it. It's just it's shot up, but price of new and used cars. We've all seen this. It's all because of the supply issues after post-COVID, after COVID, the cost of everything went up. So you had supply chain distributions, unseasonably high demand for vehicles after people couldn't buy vehicles, and we are out of time, so I'm going to have to come back Welcome back, everybody. You got to stare at the screen for this article. And this next paragraph really is the important one. Again, the price of new and used cars, the price of vehicles going up. Also, the price of repairs has gone up. It goes further into the article that there's a shortage of mechanics. It's all creating a perfect storm. We don't have enough people in the trades. We don't have enough vehicles. Again, because all of this, prices have shot up like crazy. And whenever you have distortions in the market, there's plenty of unforeseen costs and ways that the consumers actually get hurt. Again, the last issue here is that they have to get regulator approval for premium increases, and that usually is year by year. So, because they have to make up for steep losses in previous years, that's why we're seeing such a sharp increases, and we have more fatal car accidents. The two biggest factors there are people smoking pot. With the legalization of marijuana, DUIs by marijuana have gone up, and cell phone use. So people driving distracted on their cell phones. Those are the two biggest factors that they're seeing is DUIs going up, mainly marijuana and other drugs. And so I'm going to stop sharing that article. And then we have a quick article here. I've already gone through this a lot, but it's something that affects people. It's still, this talks about why groceries are still expensive, so expensive. So again, you have a similar 21% increase in groceries since the start of 2021, even higher than average inflation of 18%. So if you feel if your dollar isn't going as far, there's real reasons for it. And they're saying, look, these prices really are here to stay. Food prices hardly go down. And more than 2/3 of voters out there saying that they've been hit hard. Excuse me. Then harder due to high food prices than any other kind of inflation, including gas. And part of that is because this affects the poorest the most. They spend about 30% of their income on food for low-income Americans. And when that number goes up by 20%, it has a bigger crunch factor on their budgets and their ability to make necessary bills. And you gotta put food in your mouth when you choose between food and rent. That's a very hard decision to make. So I'm just kind of going to gloss over that and jump into this NPR article. And this has to do with articles being rejected. So I want to go ahead and share this one. We're going to start getting into the topic of the day. But this is an important side topic going into NPR did. I think this is a great article. Watching out for changes in your ACA health insurance. So we don't have the penalty for not having insurance, but a lot of people have been pushed into the ACA exchanges due to just the astronomical increases in private health insurance. So I try not to get too political on the show, but due to changes from the ACA law passed by President Obama, private health insurance is really only affordable by the people doing very well. Again, $800 is cheap for private insurance. Usually it's $1,000 to $2,000 a month. That's what I typically see. And so it takes a huge bite, and an average person, middle, lower income families just can't afford that. As a result, they have to deal with the exchanges because there's few other options. There are options where you pay a doctor directly. There's options where you get on a cost sharing plan. So there's some options out there to deal with it, but it's not the same traditional insurance as we when you file your tax return and it gets kicked back right away because there's an ACA issue. And some of the things they're talking about, brokers here enrolling people in ACA coverage, and they didn't even know about it. I think this is an exception, but it really hits hard on this. What do you do when you file your return? You file electronically or by paper and it gets rejected because there's an issue. What you're reporting to them on your Form 1098 does not match what they have. So this is where you have to find what's going on, correct it, and then refile your return. So ACA coverage for you and you don't know about it, that's where you can get hit with some really nasty surprises. My wife wanted to check out our health insurance, and she just got a robocall, someone called, and instead of just hanging up and say, please forget I exist, she actually spent 20 minutes with the person. And so she's been bombarded by probably 10 to 15 calls a day by people trying to get her to sign up for Affordable Care Act or through the exchanges. And again, we have health coverage. She was just trying to see if she could get something better because they always tell you, hey, we can, let me review your numbers and see how low we can go. And they came back with an $18,000 deductible. I think currently we have a $1,000 deductible under our current plan. So it's just a massive headache. And they talk about how different ways that people will get your information and sign you up for it. But I think the more important thing is what to do if you do have issues. And this happens all the time when people file the returns and it gets kicked back. So this all has to do with premium tax credits or the subsidy being paid by the ACA coverage. So if you owe tax instead of get a refund, find out why. And some of this, it could be unauthorized plan enrollments. It could be that your income went up throughout the year. So, and then you should, if you are signed up, you should get a 1095A, and that's the information you should be putting on your return. However, if it's not done correctly, or if your income goes up throughout the year, if the IRS shows that you have more income, then you're going to owe back some of the subsidies throughout the year. So it takes a long time to get corrected forms. So if you have this issue happen for you and haven't filed your return yet, the best thing was to file an extension. We're now past April 15th, so you can't file an extension if you didn't file one already. But whenever there's an unauthorized enrollment or a plan switch, I think this is more common. People move, people are coming in and out of this. So they talk about a cottage industry when it comes to the ERC. This is absolutely a cottage industry where people pop up about this. So when you have questions, something's gone wrong, you need to reach out to a tax professional and get this addressed. So I'm going to share the next tab. This is all about how do you correct the form 8962, that's your premium tax credit form. Sorry, I got that wrong. We don't prepare these returns, so I don't have them all memorized. But this is what really hurts people. So this is straight from irs.gov, how to correct an electronically filed return rejected. And it's the same thing for a paper return. First of all, if it's missing or if it just had bad information, they tell you to correct your form 8962, refile your return with that information, or provide a written explanation with the reasons for its absence. I don't like that because the IRS tends to ignore paper. If you just sent them an explanation, it's like throwing something into a black hole. I don't know what they do with it. They probably have a giant room where they set them on fire. I don't know. But just sending letters to the IRS is usually an exercise in absolute futility. But if you refile it with an amended 8962, that's what I would suggest doing. It used to be that they wouldn't just reject it because you have incorrect information or your information doesn't match what the IRS has. But now they are. So again, just get that corrected, get it right back into them. If you're filing a paper return, you just have to practice remains unchanged. You just have to resubmit it with corrected information. So again, they tell you review their health insurance records, make sure you have this form 1095. And I've heard of plenty of people that they didn't get the form. They didn't get 1095A form. So they have a huge, or not huge, they have a good fact question session here. What if it was rejected? It tells you exactly what to do. How do I know if I was enrolled? Again, this has to do with the form. You should have gotten it. Doesn't always happen though. Again, if you didn't get it, it tells you what to do. And I don't want to walk through all of this. Again, just has some questions here. But find some answers. Dig into this. This is still affecting people with the ACA, and it's going to as long as these exchanges are in place. And their overall goal of the program, it was alleged to squeeze out private insurance and take over most of the market. And that's what these exchanges, that's exactly what they've done. They've made regular private insurance way too expensive for most people to afford, so people are being shoved into the exchanges. But these come with a high cost, either to taxpayers or to individuals when you make more money. In my opinion, it's just another way that people get punished for success. If you make more money, then all of a sudden you can't afford, the cost of living goes up through health insurance, through other means as well. So this is interesting. So this came out yesterday. So the IRS summary of how great they did through 2023 for the last year through this tax filing season. And we're going to compare this to actual experiences by people. And again, this is the IRS patting themselves on the back, doing a little victory lap. Hey, we got through tax season. We survived. And oh, look at all of our numbers. So and I'm just going to highlight some of these. Hey, we went through the Inflation Reduction Act. We hired so many people. They're saying they answered over 1 million more phone calls, helped 170,000 more people, and they saw 75 more IRS.gov visits. I think the more I dig into IRS.gov, the more it can be helpful if you know how to navigate it, if you know how to get answers. As you can see, I go to it quite frequently when I'm sharing information here on the show. But it's not the complete story. So take it with a grain of salt. You can get some information, but dig deeper, because the IRS many times purposefully hides the ball, doesn't share the full picture because it's not in their best interest. They are still a giant collection company. That's what the IRS is. It's a giant collection company, and their whole goal is to collect taxes. They're supposed to be doing it in a fair manner. More and more I'm seeing that part of this go away. So some of they talk about, they're saying that taxpayers can see major improvements for the IRS, that it's like night and day for taxpayers. That's a ridiculous statement. So due to just an increase in population, yes, they filed more returns. But again, the fact that they're claiming that they are providing so much better service is just ridiculous. So improved forwarding service. They added 5,000 new telephone assisters. They don't know what they're doing. They're saying they answered 88% of the calls. how do they even track that when most of the time, every single day, their phones are so busy you can't even get through? It tells you call back another day. And many times you're on hold for 2 hours just to get through. I mean, that happens to me every single week. And I'm going to skip ahead of faster response times. They claim that the average time is down from 4 minutes to just over 3 minutes for IRS help. I don't know where they're getting their numbers, but this is not reality. You call the IRS. There are times you can get through in just over 3 minutes if you're calling past 5 o'clock, if you're calling at just the right time, but it's always a surprise to me when I get through that quickly. I used to be able to get through, use a trick of the trade to get through a lot quicker, but that's not what people see. They claim, hey, we did more numbers, more callback options. The callback option, I do think, is a good improvement. So it's not all bad news. Some of it, I do think, it can help, but it's mainly because their lines are so overwhelmed that if you do put in for a callback, you can get a call 2 to 3 hours later if you don't mind just waiting or just going about your day, but you have to be there to answer the call when they call. More in-person help, and I think more people should be using the in-person help at their taxpayer assistance centers. Again, they've expanded in-person hours. There's locations all across the country. You call, you make an appointment, you go in. The free file is something they're pushing pretty hard. I'm not sure if that's a good thing. I think the jury's still very much out on that. When there's issues, there's going to be no responsibility or accountability when the IRS messes up your tax return. You're going to be fully at fault without any recourse. IRS.gov, I think that's a great thing. And I direct people to use their IRS.gov accounts. You can look up your refund. You can check your transcripts. And coming soon, you'll be able to check and see, if there's any kind of fraud or whatever. You can check your account very quickly and see if it's red or green. Pretty basic. If there's an issue, it'll be red. You need to contact IRS.gov or IRS directly or use a tax professional. And then they're using chatbot to answer questions, on their website. Overall, in my opinion, as customer service gone up or down, it's gone down. No questions. It's harder than ever to get through to the IRS and get someone that's competent on the line that can actually resolve your case. So how do we deal with all this when they're less competent? They don't respond. It's important to be persistent. It's important when you call. And it's important to get things, stay on top of things. So you're going to save yourself so much headache by filing timely, by not trying to find a tax preparer at the last minute. We're coming up again the last break here. And then we're going to really hammer home in this last session about what to do if you've missed the filing deadline. So again, it's important to be prepared, to be on top of your A game. And I know a lot of people, they're just not used to it, but learning to handle your taxes better is going to save you so much time in the end. So that's really what the public services that we're trying to provide and help people with. So we'll be back in just a little bit and finish up. Welcome back, everybody, for this final session. We're going to be walking through what to do if you missed the extension. You didn't get an extension and you didn't get your tax return filed by April 15th. Now, if you're earned in certain disaster areas, you have some more time. You can breathe easy. But if you're not, it's not the end of the world. But the penalties and interest are going to start accruing. Now, if you don't owe taxes or if you're due a refund and you file late, you're fine. There's no penalty. So we're going to go to irs.gov. So the failure to pay penalty is what we're going to focus on. And this is all about, the late filing penalties. We're going to talk about that and the failure to file penalty. Failure to file, failure to pay. Those are the two taxes that immediately start getting assessed as soon as April 15th rolls past. Now, these are based on the tax owed. So if you file your return and you do it late and you don't owe, you're due a refund, then there's no penalty. Should you wait forever? No, because once 3 years passed, if your return becomes 3 years late, doesn't matter how big of a refund you're owed. If you wait too long to file a return, you will not get your refund. So a lot of people think it makes sense to wait. It doesn't always make sense. In most cases, I would say go ahead and get your return filed if you have it ready to file. If not, file an extension, but make sure you file it by the October 15th deadline. In most cases, it just costs you too much money. It doesn't make sense. These are fees that are easily avoidable. So I'm going to go ahead and share this article. This is another IRS.gov article, and we're going to go through and talk about this. And so this is just a general site, and it's just answering some questions here, but I think it's very helpful. Will I be charged interest and penalties for filing and paying my taxes late? The answer is yes. So it's April 16th. If you don't have an extension in and you haven't filed your tax return, you will be charged interest on any unpaid balance. So if you don't have a balance, the IRS is like, great, we don't have to give you the money. But interest accrues and compounds daily from the due date of the return. So when is the tax due? April 15th. If you haven't paid in full, that interest will be, so let's say you file in a year, they will backdate the interest and charge you interest going all the way back to April 15th of 2024, or the year that you should have filed. So interest rate for taxpayers other than corporations is the federal short-term rate plus 3%. So what happens here is, first of all, you get hit with failure to file and failure to pay penalties. Then you have interest added on it, and it's the federal rate plus 3%. What is it at right now? 8%. And it's determined every 3 months. It hasn't changed because the feds haven't moved their rates. But overall, it's 8% plus all these other penalties. And I've talked about this before, but we're going to go in detail about it. So I'm going to skip ahead to the failure to file penalty. That is a bigger penalty. Now, if you extend out the due date, if you haven't filed an extension, then it doesn't start until the extension date. And it says absent a reasonable cause for filing late. You can ask if you have a reasonable cause for why you're filing late. You can get this penalty waived through an 843 abatement. It's not easy, and you have to have a pretty severe reason why you couldn't file. You were dealing with the death of the family. You had a severe illness that affected you. You were dealing with mental health issues that prevented you from filing. Your house burned down. You were in a disaster area. Something happened that made it impossible or very extremely difficult. It's a reasonable cause, and it's based on the IRS's interpretation. So you have to make that argument to them. It's just easier to get it done. So the penalty is 5% of the unpaid taxes. per month until it hits 25% of the total unpaid tax. So in just 5 short months, your taxes just increase by 25% just due to this penalty. And then you have the ongoing 8% in interest on top of this. So let's talk about failure to pay. So the failure to file is the worst penalty out there. Even if you owe, if you just file, that saves you 25% penalty on your taxes. Now, failure to pay penalty accrues at 0.5% every month, and for each month or part of the month, up to 25%. So it starts at 0.5%. If you go into collections, this number jumps up to 1%. If you get into an installment agreement or a hardship status, it drops down to 0.25%, but it still accrues up to 25%. So if it's accruing at 0.5%, that's 50 months till it maxes out. Once it maxes out, it won't go higher than 25%. And for both of these, if you're getting hit with the failure to file penalty and the failure to pay penalty, it can only go up to 47.5%. But that's still half. People talk about, the interest and penalties are killing me. Well, yeah, they're that bad. 47.5%. And I like how it's late filing caps out. If you're owing for both, the late filing caps out at 22.5%. And the late payment at 25% if you are owing both. And there's a minimum failure to file penalty of $485. It's a smaller $485 or 100% of the tax required to be shown. So again, it still hits you if you have a small amount owed. It's either $485 or 100% of the return, and those are for 2024 returns. Those numbers change due to inflation. So again, 47.5% should make your jaw drop. And that does not include ongoing interest. So the interest rate right now, 8%, add 8% to that, that's, I'm having a little brain fart in the morning, 56% increase on your taxes. If you just let it sit and you don't deal with it until these penalties max out. Now it's not capped out at 56% because you have the 8% annually, and there's no cap on interest over time. So that's why you get some larger balances. I see some of them, they go up a couple $1,000s every month, or every month or two. It's insane how quickly penalties and interest can accrue. So how do you stop this? File your tax returns. If you miss the tax deadline, go ahead and get that filed. Don't wait till October. If you didn't file, the sooner you file, the sooner you stop the 5% of unpaid taxes per month. It's the biggest, nastiest penalty, and it's the one that you can avoid the easiest. If you don't have the money, you don't have the money. And you can negotiate something else or see how else you can pay. Sometimes you just need an installment agreement. Sometimes you just need some help. But again, if you're being charged 0.25%, once you get onto an installment agreement, that means it's going to take them 100 months to max out this penalty. And in 100 months, you should have the balance paid off. So again, getting into some kind of resolution helps and makes a big difference when working with the IRS. So if you've missed the tax deadline and you're wondering what should I do, number one thing is go get your taxes filed. Go in there, and if you don't have all the information, this is where you might want to just file your taxes and then get them filed, especially if you're going to owe any balances, and then amend it when you have full information later. So if someone just forgot, again, 5% is much better than a 25%. This is charged on any month or part of a month. So again, get these tax returns in. Once you file the tax returns, you start the clock for the CSEDs for when these taxes are going to expire. You can save yourself 20% still on this penalty, and then you can work on setting up some kind of resolution to reduce or address the failure to pay penalty. So again, that's not a lot here as far as the time that I'm going to spend on this, but it is very important. And we get all kinds of questions. That's pretty much a question we got all day. Should I file an extension? I said, absolutely. Get that in, mail it in. Now that it's April 16th, get that tax return filed. If you don't think you're going to owe taxes, or I would prepare it, have it ready to go. And if you don't think you're going to owe, there's no immediate rush. But again, don't sit there and put it on the back burner. If it waits too long, then you're going to lose out. You're not going to get that refund. Doesn't matter how big of a refund it is. Now, one last thing I want to mention here about filing older returns. 2020, even if you're going to owe for 2020, May 17th is the deadline to get that filed, because of COVID, they pushed out the filing deadline to May 17th instead of April 15th due to all the craziness of COVID. So you have until May 17th. There are stimulus funds where you will still get $1,000 cash in your pocket, doesn't how much you owe, by filing that. So this is why filing your returns can help you in so many ways. You know what's going on. You can actually qualify for a resolution. If you don't have filed returns, if you're missing returns in the last 6 years, then you can't do an installment agreement. You can't do a hardship status. You can't do an offer and compromise. You have to get current. And part of that is getting in the habit of filing your tax returns every single year. That's why when I talk to new clients, my very first thing is I tell them, look, file the current year return. Pay what you can by the deadline to avoid these penalties. And again, I'm telling every single client now to be paying their estimated taxes. That's another 8% added onto it. So if you don't make regular estimated tax payments, you have the 47% fail to file, fail to pay. You have 8% annual interest. And if you don't pay estimated taxes for the year, that's another 8% added onto it. So now you're looking at 63% total penalties and interest on the case. And that does not count ongoing inflation. So you wonder why, oh my goodness, they're killing me with penalties and interest. Yes, absolutely. The IRS will lay those on, drive those costs and fees through the roof. So that's why it always helps to address the most recent year, get it paid, get on track. And again, if you need help doing that, we can refer you to excellent CPAs all across the country, bookkeepers, financial planners, people that can help you prepare for this. And the 8%, when I talk to CPAs, most of them know about it, but they haven't really implemented it. They haven't really shared it with their clientele yet. And so that's why we're really trying to get that out and say, hey, first deadline for estimated tax payments just passed, April 15th. Doesn't mean you can't get some in, though. If you make a little bit of a late payment, it's going to hurt you less than if you don't make any payment at all. So take a look at your books. Make sure you're getting those estimated tax payments in. And if you do get hit with these fees and penalties, there are ways to try to reduce them, but it's always better to avoid them in the first place. So there's the first time abatement, and that's an 843 abatement, and that's a completely different conversation. But it's very possible you might not qualify for those. Many people don't. So stop the damage moving forward, get everything lined up, and then you can have peace of mind when it comes to tax season. That makes, instead of stressing out, pulling out your hair, which again, there's all kinds of shows and comedies, skits or whatever about tax season and how horrible it is. It doesn't have to be horrible. It doesn't have to be stressful, especially if you're ahead of it. And the reason that it's so bad is all the penalties and interest that happen when people don't file timely, they don't pay timely, and they bury their head in the sand and try to ignore the IRS. Not a good strategy. So I hope everybody can breathe easy if you got everything filed. If not, give us a call, 520-485-7371, or look us up online, guardiantaxlaw.com. And have a great day and look forward to taking care of many of you.